Exercise 6.4 Part 3 asks us to do what I think is the most commonsensical inventory method, but what seems to throw students off the most. It's really common for students to have trouble with this one. It's called the weighted average. And all you're doing is you're taking the total dollars that you spent and dividing it by the total number of units that you had. That's it. And then you assign that same price to each and every unit. So when you do that, you come up with a price per unit of $45.91.837. When you're doing a problem like this, I recommend that you only round at the very end, because if you round as you go along, your rounding error could get large enough that it won't work. So, every unit we bought at 45.91837. Every unit we sold at 41.9387. So, let's take a quick look. There's our 50 good units in ending inventory. So our ending inventory is those 50 units at 45.91837. That's how much is the dollar value of our ending inventory. Every unit we sold cost us $45.91837. We sold 440 of them. Remember, our sales revenue does not change. It doesn't matter what inventory method you use. You're still selling the same 440 units and you're still selling them for the same $60. What will change is the cost of goods sold, and this will change the gross profit or gross margin. So, the cost of goods sold under weighted average, or I'm sorry, the ending inventory. This is the ending inventory. That's the cost of goods sold. That's the ending inventory. Okay, the ending inventory, I'm sorry, I'm lying to you again. The gross margin, this is ending inventory, please excuse me. The gross margin is $61.95.92. Under LIFO, it was $6,000. Remember, we did that one a little earlier. And under FIFO, there's the FIFO, $6,300. We did that the first one. And then we did LIFO, $6,000. And not surprisingly, weighted average falls in the middle. So, major takeaway. After I move it up so you can see the numbers I'm talking about. The major takeaway here is that while the revenue will not change, the cost of goods sold will change, and when the cost of goods sold changes, so too must the gross profit or gross margin. And you'll see the three different weighted average, gross margin, LIFO, gross margin, FIFO, gross margin.